So today we're going to talk about fixed income market volatility. That's been one of the most prominent storylines in financial markets to start the year, and volatility, of course, meaning generally we've seen negative returns on fixed income this year. So for example, a lot of your primary benchmark indexes for the fixed income market are down anywhere from say 1 to in some cases 10% to start the year. So these are levels of fixed income market volatility due to rates moving up that folks have basically not ever experienced in their investment lifetimes for the most part. So I want to touch on that today and try to provide some continued perspective in terms of how we think about fixed income markets and how we think about investing in fixed income within these markets. So I mentioned the return side of things. The increase in interest rates is typically what you'll see in the financial press reporting, and that of course has been highly unusual this year in terms of how much rates have moved up. Generally, depending upon what you're looking at in terms of what those rates are referenced with respect to, generally rates have moved up around 1.5% to 2% so far this year in just about 4 months of 2022. That is a very, very large movement up in rates, and understandable that we'd be getting a lot of questions about fixed income. So rates are moving up, as we've talked about in some prior videos, as the Federal Reserve and the markets try to combat what has been high inflation. We now know that we're going to see short-term interest rates at least move up already and potentially move up more during the course of the year. So it can beg the question of, should I keep investing in fixed income? If I am investing in fixed income, what are some things to think about in terms of investment approach there? So the first thing to understand that's definitely counterintuitive is that returns on fixed income strategies can still be positive when rates are increasing. So a lot of people think, well, if rates increase even more from here, is that not guaranteed to be bad for fixed income markets? And not necessarily. We could certainly, of course, see returns continue to be negative, but just because rates are increasing doesn't guarantee that returns will be negative. And the reason for that is markets are always forward-looking, and markets now know that rates are going to increase likely even more between now and the end of the year. So that's already built into markets to some degree, is I guess the way to think about it. On the fixed income strategy side, some things that we would continue to echo that have been hallmarks of the way that we think about fixed income that we think are still pertinent is consider keeping short to intermediate term exposure in your individual bond or bond fund approaches to try to mitigate what volatility there is out there compared to longer maturity approaches. Consider some portion of the allocation being in directly inflation protected securities, like TIPS is another thing to potentially think about from a fixed income approach perspective. And then also remember that, like everything else, what happens from here in financial markets is notoriously difficult to predict. With interest rates, I always think about the predictions that rates were going to increase rapidly about 8 to 10 years ago, and every subsequent year after that, after the financial crisis, and we really did not see that happen at all in any substantial continued way until here recently. So keep that in mind in terms of markets are very, very difficult to predict. And then finally, one thing to think about that we've touched on in a prior video is outside of fixed income, one thing you could think about would be alternative investing strategies, potentially for a portion of the fixed income allocation. So hopefully that's helpful in terms of helping you think about fixed income markets. If you have a question, feel free to reach out to your advisor or click the link below, and we're happy to tackle additional questions from here.